Member of the Prime Minister's Economic Advisory Council, our next speaker has been closely involved in rethinking India's economic strategy, from public investment to supply-side reforms in a world of geo-economic rifts.
To discuss how India is navigating geoeconomics and unlocking growth, it is our honor to welcome Dr. Sanjeev Sanyal, member of the Prime Minister's Economic Advisory Council, and he will be in conversation with Senior Executive Editor of ET Now, Sajid Mangat.
Sanjeev, thank you very much for joining us today. Let me start the entire conversation with respect to Rupee. That's something, maybe worrying for many of the people because it's been depreciating. But it has its inherent strength in a geopolitical scenario because that makes exports a little competitive in that sense. What's your view on it?
So first of all, let me thank the organizers for inviting me to be here. See, the rupee, one important thing you got to understand, we have a very well established way of managing the rupee since the 90s, which is that the rupee is mostly allowed to find its own level, but the Reserve Bank of India uses its reserves to intervene in either direction to stop excessive volatility. This has served us very, very well over now several decades, and there is no reason to abandon it. So, first of all, in terms of the pure mechanics of intervention, let me say that that will continue to be the case. The issue is, what is the direction of the rupee? Now, let me say that the rupee and its current weakness should not be necessarily conflated with some economic worry, because historically, if you go over time, you will see that economies that are in their high growth phase very often go through a phase of exchange rate weakness. So you go back to, for example, the Japanese before the Plaza Accord. The economy was growing very, very fast, but their exchange rate was kept quite weak. The Chinese had that in the 90s and 2000s till they began to allow the yuan to strengthen. So in itself, it does not mean anything as long as it is not generating domestic inflation, which clearly it is not. If anything, our inflation, one can argue, is too low. So under these circumstances, what is happening is that the rupee is not only gaining from its weakness in terms of the rupee-dollar rate. Remember, the dollar itself is not particularly strong right now.
Yeah.
But remember, we have now inflation for the first time that is systematically below world inflation. And our productivity growth is also below, well above world rates. So on all these counts, our real effective exchange rate is very competitive. This gives us the space, not just as in terms of purely export competitiveness in an environment with tariffs and other things. It also gives us the space to begin to remove many of the inefficiencies that tend to accumulate in our trade policy during situations where we are afraid the rupee weakness will cause inflation and so on. For example, the wholesale removal of quality control orders. We have been able to do this because the circumstances are such where the exchange rate allows for us to do this without a fear of a major rush of dumping and other things. So the QCOs basically were introduced at a time when the corporate balance sheets were weak, and we were afraid of this huge dumping. We also had the COVID crisis. Right now, our balance sheets are much better. The quality to price trade-off is better understood by our manufacturers. So, allowing the exchange rate to have come to these levels allows us to remove these inefficiencies. The QCOs are not the most efficient way of managing, dumping type issues. So I think overall, I am not concerned about the rupee at all.
So you're saying basically you don't need to have dumping duties because the rupee is doing our work basically.
Yeah, dumping duties is a different issue. I'm talking about specific cases of QCOs. But yeah, some cases the dumping duties may also not be needed, but that depends on the particular item. But what I'm trying to say is that this idea that the exchange rate movement is some award for economic performance, we need to be a little careful about. Because every high growth country in the initial stages of takeoff has had a phase of weak exchange rate. In fact, some people would argue that that has been maybe not a sufficient condition, but a necessary condition for the takeoff phase to happen.
We are a capital goods importing country, and the depreciation in rupee, doesn't it hurt us in that sense when we are importing capital goods into the country and in the setting up?
Well, we are also a capital goods producing country. So if there are capital goods that are particularly expensive, then yes. But if there is somebody who can produce it in India, then for that person, this is a good opportunity. Secondly, to the extent that FDI comes in, the rupee value of that each dollar of FDI that comes is now greater. And if that FDI is buying foreign capital goods, well, it continues to be in dollars, so it does not matter. So either which way, I would say, yeah, there are some trade-offs for individual buyers or sellers. But overall, I am not concerned as long as this remains reasonably well contained, smooth, and is not triggering domestic inflation.
One of the reasons which has been stated for the rupee weakness is the foreign outflows which is happening there. Do you think that's a legitimate reason for that? Because from them, for their point of view, if they are bringing more dollars, they can buy more stocks because we haven't moved much from a market's point of view.
So this should be a healthy thing. If why are people putting money into India? So that presumably they make money and take it out. That is the nature of how these markets work. On a gross basis, money is in fact coming in. In fact, we are receiving right now record inflows of money coming in. And just in the last 2-3 weeks, you have had Amazon, Microsoft, Google, all of them announced, just between the three of them, some $75 billion of investment. So it's not that money isn't coming in. But yeah, for a while there was a phase where our valuations were very attractive and people thought it was a good place to liquidate and monetize some of their things, which is a good thing, which suggests to us that their investments were successful, and this is precisely what leads to other rounds of investment. I don't think, once we accept a market-based system, we have to accept the cycles that entail it, because that is what leads to the next round of investment. So we should be happy that people are making money here.
Is this a new normal from a depreciating rupee point of view? Because in the past we have seen 2 to 3% depreciation in rupee, but this year it has been a little more than that actually.
I am not too concerned because, as I said, the rupee is super competitive and is gaining competitiveness every year, not just from this weakness. We have inflation which is below world inflation, and our productivity growth is higher than what is in the rest of the world. So the rupee is gaining competitiveness on money fronts, which is one of the reasons why our exports are holding up despite these tariffs. So I am not too concerned about it in itself. Now, of course, if the rupee falls at a time where we have pressures, macroeconomic pressures, that's a different situation. But we don't have, excessive external debts to repay. Our debt to GDP ratio is very well maintained. There are no macro pressures. So when there are no macro pressures, the rupee, in fact, if we have ambitions that in the long run the rupee will be a hard currency, then we will have at some point in time to be quite comfortable with the rupee doing what, say, the yen dollar does, or the euro dollar does, or even the GBP dollar does. We have to allow these adjustments to happen. It should be a natural part of things.
Yesterday we had the finance minister come and tell us that tariff has been weaponized, and practically every country is now having a free trade agreement with another country, thereby making the WTO defunct in that sense, because there's no global trade organization or no global trade as such. It's bilateral trade now which is taking place. How do you see this new scenario which is building up?
So she's right. The old WTO-based multilateral system is indeed now broken down to a large extent, for the time being at any rate. And it's not just about Trump tariffs. It was already beginning to fray at the edges even before this current episode. it is the case that we now, if we have to live in this environment, we have to have bilateral deals of various kinds, which we are pursuing. We have something signed up with Australia, the UK, we are pursuing very aggressively with the European Union and the US. But let me also be very clear here that as we pursue these, we will have to make decisions where some trade-offs have to be made, but we will work to make sure that they are done to our best national interest. So, for example, in the case of the US,
Yes.
we have not escalated anything. We have been careful not to do that. But at the same time, we have not bent down. In fact, there are now only two countries that have not really bent down to US pressure. One of them is China, and the other is India. China, everybody expected that. But I think the world community has been surprised by our willingness to stand up. And I keep saying that, look, if in a situation where our economy is growing at somewhere between 7 and 8%, inflation is not an issue, external debt is not an issue, and there is no other real pressure, if under these circumstances we are not willing to stand up, then when are we going to be willing to stand up? So, while some trade-offs, of course, are made, and every trade deal some have to be made, it has to work for them just as it works for us. But we have been willing to stand up to whatever we think are unreasonable requests. And if it takes a little bit of extra time as a result to sign a deal, so be it. If you are negotiating with anyone on any topic, time matters. The time is in our side, in that we are under no immediate pressure to sign anything. Now, as I said, some reasonable trade-offs have to be made both ways. But this is not to suggest that we will, will bend to pressure. And I think our Honorable Commerce Minister has also earlier stated, we will not sign anything with a gun to our head. So be very clear that not only are we going to sign things as we think are our best interests, let me say that worldwide we have gained respect for this.
But is there a timeline for this? Because we've been able to hold off US pressure, 50% tariff. Started off with 25, then additional 25% for a reason which is unfair and which is, globally is,
So I think one of the things you got to understand is that we cannot just see this as a trade issue. India is emerging as a world power. Even those who otherwise are our friends and wish us well may not be entirely comfortable with our rise. And this is nothing unique. This is a human, late 19th century. America had to win 2 world wars. Japan had to defeat the Russians in 1905. And so on and so forth. The Chinese had to fend off the Americans in Korea and then in Vietnam. So the point I'm making is, if our rise only requires us to take a few punches for tariff wars, then maybe we are getting it cheap.
I wanted to discuss about maritime economics as well, because that's a topic that interests you. But before that, one question on interest rates. We've seen 125 bips cut by Reserve Bank of India. We are in a scenario where we have low inflation. Yet the bond yields are not softening. What is your take as an economist on how bond market is viewing all this?
So, it's very clear that inflation is now below the target range. Now, that it may pop back up over a little while. There are some things like vegetable prices, etc., tend to be volatile. But nevertheless, I think it's fair to say that inflation is not a major issue. And the Monetary Policy Committee has been right in cutting interest rates. The question is about transmission. It is true, it has transmitted through to deposit rates and so on, which the banks are cutting. But yes, the bond yield and the bond curve has not adjusted downwards. That to partly will be a matter of the Reserve Bank's open market operations and how they think the reserve money growth, etc. And I'm sure they are looking at massaging that to manage this thing. But let me make a broader, longer term point. For a country that has now seen inflation significantly below world inflation for now some time.
Yeah.
Now, think about this for a while. Till we introduce the inflation targeting framework, Indian inflation used to routinely be in the 8 to 12% range. It's recent enough that most of you will remember this. So, if you're in the 8 to 12% range, it is not unusual for your deposit rates, etc., 12, 13%, those kinds of rates, borrowing at 16%. In fact, back in the 90s, I remember taking my first loan for a car at 21%. So, we were never an Argentina-type high inflation country, but we were a high inflation country. Now, in a relatively short period of time, we introduced a inflation targeting framework with a 4 to 6% range, which we thought was very ambitious when we introduced it. We have more or less been in this range. We have been out of it up twice and now down twice, including the current episode. Now, what does it tell you? That our inflation rates have now genuinely come down by hundreds of basis points from where they used to be. Okay? Now, if that is the case, and this now needs to filter through into the general public's expectation of what interest rates should be. We cannot expect, for example, Provident Fund interest rates to be what they used to be in the good old days, because the real interest rates were just too high. So we need to now adjust the entire the interest rate structure downwards, and permanently so. Because otherwise our real interest rates are just too high. So I have written about this as well, that in our inflation expectations of both policymakers and of the general public now need to adjust down 400-500 basis points from where they historically used to be. Now, once that happens, and it takes time to filter through, but once that happens, we will begin to see interest rates in India that are comparable to that our industry sees abroad. But that requires for us as a population to accept. Now, you cannot have a situation where the policymakers and population expect in old style Indian deposit rates, but expect international level lending rates. Obviously, that is not possible. So the whole structure has to architecturally come down. And that opportunity now is there. It would be a fantastic thing for Indian industry if we can begin to finance debt capital at globally comparative interest rates. Now, this is something, by the way, just like with the exchange rate, this is something that happened in all countries during the triggering up phase of their high growth. So, whether it is China or Korea and Taiwan or Japan before that, or for that matter, when we go back to Britain, another country in the 19th century, bringing down the cost of capital structurally was a very important part of having a sustained economic boom and investment driving innovation, investment, and so on. So I think here there is an opportunity of bringing our cost of capital to something compared to world levels. But as I said, we as a people need to then, including the savers in the system, need to then accept that the returns on capital, on debt capital anyway, will come down.
Moving to the maritime economics, which is which you look at very closely, and you are closely involved in the shipping policy as well. How do you think the trade dynamics are going to change going forward from a maritime point of view?
So I think one of the things that people forget is that India, from a geo-economic perspective, is actually an island nation. So let me explain. We have two long borders. One is with Pakistan, with whom we don't trade. The other border is with China, with whom we do trade, but not with the Himalayan parts where we have the border. We trade through the maritime route even with China. So from a geo-economic perspective, India is an island nation as much as Britain or Japan. This is something that is not appreciated by people generally. And for a variety of reasons, Indian policymakers till recently tend to have a very landlocked view of the world. This is thankfully now changing, and we are beginning to now behave much more like a island nation. So as a part of that, we have of course heavily invested into our navy, but in the last 18 months or so, we have, if you will have noticed, dramatically changed all our maritime related laws. Laws relating to ship flagging, ship ownership, and so on. We have introduced a major big push into shipbuilding.
The new shipping policy.
There's a shipping policy that we have put 70,000 crores as incentives for shipbuilding. And in fact, Indian shipyards used to be half empty for decades. Just in the last 2 years, they have now got orders stretching out till 2030 in some cases. And so as a result of which, India has become suddenly, in a very short period, a very exciting hub of shipbuilding, shipping innovation, and so on. And I would argue that by 2030, we will emerge as a serious player in the shipbuilding space.
Do you see a lot of foreign direct investment now coming into shipbuilding into India, given that you have come out with a new shipping policy?
Absolutely. So there are two types of things happening. There are global shipbuilding majors, for example, Hyundai and so on, who are investing billions, looking to invest billions of dollars into Indian yards. So that's one. Indian yards themselves are expanding, like Cochin, Mazgaon, etc. They are flooded with orders. So that is one part of it. The other thing that you are beginning to see is that global shipping lines are beginning to give Indian shipyards orders. And at the same time, as I said, we are ourselves giving naval orders, but also we are now trying to build a national shipping fleet. So people don't realize this, that India only has some 480 odd large cargo ships, okay, which can, they're not very, very large necessarily, but even including medium ones for doing, international trade. Now, 480 of such ships, including tankers and container ships, etc., is very, very small compared to our size of the economy. I mean, 95% of our trade is actually carried on foreign ships. Now, as I keep telling people, this is our single biggest geostrategic vulnerability. I mean, you don't need a country to decide that they don't like us. If 3 or 4 large shipping lines say they don't like India, we will be in serious trouble because we won't be able to export, we won't be able to import oil, all kinds of things will happen to us.
Or just a change of priority of what goods to carry. That will
it's not like they don't like us. For whatever reason, they decide to that China is a better, more lucrative market, and they all drift off there along with their containers. We would be in trouble. So we need to invest into this. We underinvested into it for long periods of time, but we are now trying to correct it. As I said, a lot of the global majors are investing into it. Just so that you know the statistics, something like 55% of all the ships being under current construction are done all in China right now. So this is how concentrated it is. Of the rest, another 20% is built in Japan and 20% is built in Korea. So that is 95% of all the ships in the world are built in this tiny area. Okay. Rest of the world combined builds only 5% of this, and we are less than 0.5%. I am just saying that we have a good chance, even if we get to be 3-4% of the world market, we will become the 4th player. And then, of course, these things you create a cluster, and then it builds on itself. And in this context, let me say, India has some very big advantages. After all, what is shipbuilding? Shipbuilding is actually millions of hours of welding of steel plates. That is what shipbuilding is. It requires steel. We are the world's 2nd largest steel manufacturer. People forget this. After China, it's us. Big gap, but we are still number 2. We have shipbuilding capability. We build aircraft carriers and nuclear submarines. I'm sure we can build tankers. Very importantly, we have young men. This is a young man's business. Women can't, and old men also cannot do this because it is physically exhausting. And robots also can't do this. So for the time being, this is young man's business. And one of the reasons that both Japan and Korea are slowly moving out of this business, and this is what allowed China to grow so fast into an area it was historically quite weak in, was because of the lack of young workers. The demographics didn't allow it. Now, China itself will have this problem, but even if it didn't, Korea and Japan certainly already have it. So, that is another thing. And of course, there is the huge thing of our domestic market. We ourselves, as I said, need ships. 95% of the world ships, 95% of our own trade is carried on foreign ships. So all of this combined means that there is a serious opportunity here for us to become a shipbuilding major.
How do you look at technology in here? Because while we have the raw material, we have the demography to manage this, and we now have the policy. Infra and technology are something which are not there, or they're lacking in some way in that sense.
So we need to build new shipyards because till very, very recently, by the way, many of our shipyards, including the one in Pipavav, etc., were lying empty. Now all of us...
NCLT also, right? There was a couple of shipyards which went into NCLT.
Yeah, so now suddenly you will find that most of our shipyards actually have excessive orders. They are actually turning away orders because they are filled till 2030 or something. So this itself has changed. We now are looking at building new shipyards, including Hyundai and others are looking into where they can do this. So they are in talks with some of our coastal states on building new shipyards. We ourselves are building a brand new port in Vadhavan, which is just north of Mumbai.
Yeah.
This one port will be bigger than all our current ports combined when it is ready in 5-6 years time. So these are very, very big projects. So for the first time we are thinking in, Chinese scales, so to speak, if I may use that term. So I think people are underestimating the sort of energy that this sector has.
And what about the steel? It requires specialized steel. Is the industry ready to
so
supply
I think,
steel in that scale?
Of course, building a steel requires all kinds of different steel for different parts of the ship, for different kinds of ship, etc. For quite a lot of it, we already have the capability. In those we don't, we can acquire it. As I said, our steel manufacturers are not small players. JSW is a large steel producer by global standards. So, should there be demand for it, I do not think Indian steel producers, whoever they may be, are not capable of, buying the technology. If necessary, there are large numbers of high quality steel companies in the rest of the world which we can encourage to come here, or even some of our companies may buy them for the technology. So I don't think the technology is, there may be certain very, very specialized areas where, we won't be there. Marine engines is an area we still don't have the capability. But for building the hull and most other things, we are there.
Now, what I see is marine security, maritime security and maritime trade are now converging in some way. And along with that, your, foreign affairs or external affairs policies are also converging. How do you see trade from here on? Because earlier...
If you want to be a maritime merchant navy power, and be considered seriously, you have to back it with hard power. This has been true from the beginning of time. When Britain was and this to some extent will have to be for us as well. I mean, even right now, many shipping lanes like the one through to the Red Sea, there are serious piracy issues, and the Indian Navy plays a very important role in keeping that channel free. So we have to be willing to back it with military power, no doubt about it, and we have to invest in infrastructure for it, as we are in fact doing right now in Nicobar. So we have to back it to some extent at least, and even the Americans who had invested heavily in the Navy, but then kind of let it drift for a while. They have now discovered that they need to rush and build not just the military Navy, but even their merchant Navy. By the way, if you think our merchant fleet is too small for India, then let me tell you, there are only 87 large ships that are US flagged. Did you know this? 87. It is such a ridiculously low number, and their dependence on foreign shipping lines is so large that they are also scrambling, by the way, to build up their shipping industry, which is not easy for them to do because now they have actually declustered. The old workers have retired. They don't have the kind of same level of young workers, and of course they don't want immigrants. Many of the skills are lost, the clusters are lost. In fact, the Indian shipping cluster is currently more powerful than the American one for the merchant capability. So one of the things that maybe in which way where India and the US can negotiate on is that we build the hulls. They can do whatever else they want inside it, but it may be an interesting place of partnership where India basically builds hulls, not just for their merchant fleet. In fact, my own view is that we should be willing to even do it for their naval fleet. They may not agree, of course, but I'm just saying it. If we were lived in a very efficient world, that is what we should do. And even if the US doesn't agree, there are many countries in the Indian Ocean region, like Australia, where the only way the Australians can build a navy is by essentially buying Indian hulls.
You know, trade was always a secondary thing till few years back, and now trade is not only influencing economies, it's influencing stock markets, and maybe the way the policy and narratives are getting built there. Do you see trade to become the key central point for any country that's growing at a fast rate?
Absolutely. And I'm surprised that you don't think it was the case earlier. It was always the case. I mean, look at the last 30 years. Which were what did all these companies like Infosys, Wipro, TCS, what were they doing? They were basically doing all kinds of services for American clients. That is trade. The services trade. So trade has always been an important part of economic policy. This is the reason, whether it's services and digital trade or physical trade through merchant lines and so on, there is always consequently a link to geopolitics and geoeconomics. So whether it is China's own OBOR or our newly constructed idea of IMEC, or the free trade agreements, or the Indian Ocean sort of security architecture, which we need to be an important part of that. All of this has always been an important part of economic policy. Those who are of the opinion that you can separate hard power from economics do not understand either economics or hard power.
Sanjeev Sanyal, it was a pleasure talking to you today. Thank you.
Thank you very much.
Thank you.